Good morning, students. How are you all? Hope you all are doing fine. Okay, I am also good. Students, shall we learn accountancy, the ninth lesson? Sorry, the 10th lesson, depreciation accounting. Under depreciation accounting, we are about to complete the first method, the straight line method or fixed installment method. Okay, that one we were doing the 10th problem yesterday, so I will complete that one. There they have asked to prepare two accounts, prepare machinery account and depreciation account. So we will prepare the depreciation account. Depreciation account to sides, debtor, creditor. Okay, date we need to write. From the machinery account we can write. Okay, first year, the depreciation in the journal entries we prepared two entries, isn't it? First one, depreciation account debtor to machinery. Okay, then this depreciation will be transferred to profit and loss account. Second entry, profit and loss account debtor to depreciation. So first one, this 20,000 amount we will write. First entry is depreciation account debtor to machinery account. Year ending 2015 March 31. To machinery account 20,000. Then same date we need to transfer this one to profit and loss account. So profit and loss account debtor to depreciation account. So by profit and loss account. $20,000. So here we have to write the total. Same amount only will come. Okay. Then next year 2016 March 31 depreciation 26,000. Okay, next year 26,000. March 30 by profit and loss account. Same 26,000. You draw one line and write the amount. Okay, then in the third year, how much? Here you see one depreciation 10,000, another depreciation 12,000. Okay, so 22,000. By profit and loss account. 22,000. Again, draw double line, single line and write that same amount. So that account also. Okay, now we will learn the next method of calculating depreciation. Okay, next important method is diminishing balance method or written down value method. Okay, second one, diminishing balance method. Method or written down value method. Then another one, reducing installment method. They are fixed installment, here reducing installment method. Okay, because here under the diminishing balance method, the depreciation is charged. Here also one fixed percentage only will be charged annually at the written down value of the machinery. Okay, their straight line method, only at the original cost we have calculated depreciation on straight line method. Here fixed percentage on written down value or the book value of the fixed asset, we will calculate the depreciation. Here, what is the original cost? Original cost of that written down value here means original cost minus the previous year depreciation. We will get written down value. On this value, we need to calculate the percentage for the next year. Okay, that is the method. That's the difference between the fixed installment method and reducing installment method. Okay, it is called diminishing balance because every year the balance gets reduced. Okay, that value of the depreciation gets decreased each and every year. Here we are calculating not on the original cost but on the written down value of the fixed asset. Then the installment that we charge on the depreciation account every year is reducing. Okay, it is not fixed installment throughout the life of the asset. And here we will learn the merits of the written down value method. What are the merits? Here it will be having equal charge because in the beginning of the life of the asset, it will not get more maintenance cost. Okay, but in the beginning of the years, the depreciation amount will be more. But in the forthcoming, around the end of the life of the asset, the depreciation will get reduced. Okay, so when they add the depreciation and maintenance cost, it will be same. Okay, in the beginning of the life of the asset, the depreciation will be more, but here the maintenance will be less. But if in the beginning of the life of the asset, but around the end of the life of its asset, the depreciation amount will be less, but the maintenance cost will be more because once the machine gets older, they need to do more maintenance work, okay, to make it run. So it will make the equal charge for all the years from the beginning till the end of the life of the asset. And it is a logical method. There is a logic because in the initial years the asset will give more, it has more productive capacity. We can produce more goods. Okay, more hours we can run that machine. So we need more, we charge more depreciation, but around the end of the life of the asset, it will not give more production. The production will get reduced, so the amount of depreciation also get reduced. Okay, so there is a logic under this method. Okay, then what are the limitations? Okay, what are the limitations? Here in the straight line method, we see that at the end of the life of the asset, the value will become zero. Here the value will never become zero. Okay, then first we will calculate for 1,10,000. Then next year we will calculate for 90,000, 10%, 9,000. Again we will deduct this one. Next year, third year, it will be 81,000. From 81,000, 10%, 8,100. Like this, it will get reduced, but it will never become 0. The value will never become 0. And as in the previous problem method, here also it ignores the interest. Okay, we are going to learn some of the other methods. There in one or two method they are considering the interest. Okay, here they ignore the interest factor, because if we have invested the amount that we have invested in purchasing this asset, we would have got some amount as interest. Okay, if we have invested that money in some other investments, we would have got some interest from that investment, but here we never consider that interest. Okay, that is one of the demerits. Then here very difficult to determine the rate of depreciation. In straight line method, we can calculate very easily, isn't it? Data rate of depreciation is equal to amount of depreciation divided by original cost into 100. But here it is very difficult to calculate the rate of depreciation. And again it ignores the actual use of the asset. Actual use of the asset is not considered, because we cannot that very in the same every year we never use. Some years they may use the machinery for many hours, isn't it? So it is not, the actual use of the asset is not considered for calculating the depreciation. Okay, the second method you have understood. Here only we are going to do many problems. Before going to these problems, we will learn all the other method also. Okay. Sum of years of digits method. Sum of years of digits method. Here this method, sum of years of digit method, is also somewhat like diminishing balance method only. Okay, because the amount will get reduced only. Okay, here how they calculate the amount of depreciation. They will multiply the cost of the asset. Okay, cost of the asset. That means cost of the asset means what? Original asset, original cost minus scrap value, isn't it? They will multiply this with the total number of years, okay, that they remain in the life of the asset. Okay, years, number of years remaining in the life of the asset divided by the sum of digits of the life of the asset. Sum of digits of the total life of the asset. Okay, that means 1 plus 2 plus 3, like that. Okay, if it is for 20 years, that is a sum of digits of total life of the asset. Okay, here this method is used especially when the assets are having the they will be affected by the obsolescence, because very few years we can use. Okay, then this will be very useful to calculate the years remaining, then we have the total life of the asset. Okay, so or the repair charges will get increase in the forthcoming years. For that type of assets, this method is very useful. The next method, machine or rate method. Machine or rate method. Here we are not calculating the amount of depreciation for 1 year. Okay, they will calculate depreciation for one machine hour. Okay, for one machine hour, what is the depreciation? And they will calculate the machine hours for the whole year. Okay, then they will multiply. Okay, total number of hours. Okay, so how they will calculate the amount of depreciation? Number of machine hour they have used. Okay, number of machine hour into rate of depreciation per 1 hour. Okay, that is the calculation for this machine hour rate method. Then depletion method. Depletion. This method of depreciation is calculated especially for the natural resources that are extracted from the earth. Okay, especially the oil refinery, oil well, or the quarries, mines. For these assets, we need to calculate depreciation under this method. Okay, so how they will calculate the depreciation under depletion method? Here they will calculate for 1 unit. First they will calculate for 1 unit. Rate of depreciation for 1 unit. Then they will multiply that rate into number of units they have extracted. Then they will get the amount of depreciation. Okay. Then the next method is annuity method. Annuity method. Here they will amount of depreciation will be calculated by the annuity factor. Okay, annuity factor into original cost of the asset. Okay, here they will consider the interest factor. Okay, if we have invested the same amount in some other asset, then we would have got some interest from that investment. Okay, so interest will be considered. Okay, here to calculate the amount of depreciation, annuity factor will be considered. Amount of depreciation. Depreciation is equal to annuity factor. They will give one annuity table will be there. So one table will be there that we need to take one value into multiply with the original cost. We will get the depreciation. Okay. Then the revaluation method. Revaluation method. They will value the assets every year. Okay, every year at the beginning and at the end. So they will compare the value that the value will get reduced, isn't it? So the value of the closing asset over the opening asset will be the depreciation. Okay, the depreciation will the value will get reduced at the end of the year. So the difference between the opening value and the closing value will be considered as the depreciation here. Here this method is used for livestock or for loose tools, equipments. Okay. Then sinking fund method. Sinking fund or depreciation fund method. Okay. Here every year the amount of depreciation. Okay. They will keep aside the depreciation amount and they will invest in some asset investment. Okay, so they will invest the same amount in some valuable investment. So at the end of the life of the present asset or current asset, they will sell that investment and they will get the they will replace the old machine with this amount. Okay, here from the investment they may receive some amount as interest also. That interest along with the next year depreciation amount they will invest in the same asset. Okay, so they will get a considerably very large amount for replacing the present asset. Okay, that is called sinking fund method. In the same way, another method, insurance policy method, that ordinary one that we used to do. Okay, each depreciation amount is considered as the premium, and this premium will be paid in the insurance company every year. So once the old machine gets out of date, then that means they need to replace that one. They will get they will claim that policy amount and they will replace that machine with a new machine. Okay. So all the 9 methods are there we have learned. We are going to do the problems with the second method, written down value method. Okay, written down value method and straight line method are the two methods that we have to learn doing problems. Okay, other methods they have not given any problems for us. Okay, up to 10 we have completed. Now 11 we will do. I will read and you check into your textbook. Okay, an asset is purchased for rupees 50,000. Rate of depreciation is 15% per annum. Calculate the annual depreciation for the first 2 years under diminishing balance method. Okay, original cost rupees 50,000. Then rate of depreciation 15% per annum, isn't it? So amount of depreciation, for the first year is equal to 50,000 into, okay, we will write the amount here. Okay, 50,000, 15 by 100, 20, 15 into 5, 75, then 20, 7,500. We need to deduct this one, less amount of depreciation. Okay, so 42,500 we have for the second year. Okay, we need to deduct this amount from the original cost. Okay, then now again we need to deduct the amount of depreciation for the second year. Now we need to calculate 42,500 into 15 by 100. Okay, so 425 into 15, 5 5s are 25, 10, 12, 1, 20 plus 1, 21, and 5, 2, 4, 5, 7, 3, 6, 6, 3, 7, 5. Okay, otherwise simply you can write, no need to deduct also. Amount of depreciation 7,500. Amount of depreciation for the second year, we need to deduct, okay, this amount from this amount and we will get this amount. For that purpose only I have written like this. Okay, no need to calculate, or you can write the next year's value. Okay, then the next problem, a boiler was purchased on 1st January 2015 from abroad for rupees 10,000. Shipping and forwarding charges amounted to 2,000 rupees. Import duty 7,000. Expense on installation 1,000. Calculate depreciation for the first 3 years on diminishing balance method, assuming that the accounts are closed on 31st December each year. Okay, we will do that. This problem 12, isn't it? Calculation of amount of depreciation. Take one page. Okay. Okay. Original cost of the boiler. Here we need to add, isn't it? We purchase from abroad, that one value is 10,000, and that shipping and forwarding charges. All the expenses related to purchases we need to add. Import duty 7,000. Installation charges 1,000. How much? 10,000, 12,000, 19,000 plus 10,000, 20,000. Okay, now less depreciation. Now depreciation for the first year, when the accounts get close, here when we are purchasing, purchase price on 1/1/2015. It is closing on 31st December 2015. So 1 year only, isn't it? So the percentage is how much? 10%. Amount 20,000. 10 by 100. So 10 less 2,000. Now we will calculate the remaining amount 18,000. So second year depreciation. Okay. On 31/12/2016. From this 18,000 we need to calculate. Okay, so 8,800. 16,200. From this we need to calculate depreciation for the third year. 2017. So from 16,200, 10%. So 1,620. Okay. 14,058. Each year only they will ask. Okay. They will check. Okay, here 2,000, 1,800, 1,620. You can write simply also for depreciation for the first year. Okay. Depreciation for the second year. Depreciation for the third year. Or date depreciation as on 31st December 2015. Okay, shall we do the 13th sum? I will read out the problem. Furniture costing 5,000 was purchased on 1/1/2016. Installation charges being 1,000. Furniture is to be depreciated at 10% per annum on the diminishing balance method. Past journal entries for the first 2 years. I think you remember the journal entries, isn't it? Here, but when you calculate the amount of depreciation, that on that working place only we have to do the calculation. Okay, only journal entries they have asked. For how many years? 2 years. Journal entries. Okay. Yeah, the particulars, date particulars. Okay. When we purchase 1/1/2016, January 1. What is the entry for purchasing? Furniture account debtor to cash. How much? 5,000 plus installation. So totally 6,000. Bracket furniture purchased. Then that at the end of the first year, when the accounts close, nothing given. So 1/1/2016. So it will end December 31, same year, isn't it? Here entry is depreciation account debtor. The entry is same only, okay, for any method. Depreciation account debtor to furniture account. Depreciation charge or depreciation provided. Okay, now need to calculate the depreciation. For 6,000, how much percentage? 10%. So we need to reduce 10. No need to write and put, okay. No need to calculate. Now you have we need to transfer this depreciation to profit and loss account. Okay. So profit and loss account debtor to depreciation account. Okay. Depreciation transfer to, you write full word, okay. Profit and loss account 600. Then for the next year 2017 December 31. The first entry will not come again, okay. Now providing depreciation, transferring depreciation. Depreciation account debtor to furniture account. Okay, now we need to calculate the depreciation, that we need to deduct the 600 from 6,000. How much we will get? 5,400. 10 we need to reduce, so 540. Okay, depreciation provided. Then transfer of depreciation. Profit and loss account debtor, depreciation account. Okay, depreciation transferred to profit and loss account 540. Only for 2 years they have asked. Okay, over. Okay, again 3 more problems there. Today we cannot complete. Okay, so in the next class, I think we can keep this problems as it is. I will start the next lesson tomorrow. Otherwise, I will complete this one. Okay. Okay, students. Thank you very much. You complete the notes. You write in the notebooks and update your notebook in accountancy notebook. Okay, students. Thank you very much.